Well, we are continuing our journey into the strategic metals because you demanded it. We are going into Cobalt this episode with Ryan Snyder from First Cobalt, and he's in conversation with Frik Els, mining.com at the Global Mining Symposium. Hello and welcome everyone to the Northern Miner Podcast. My name is Adrian Pocobelli, where we go in depth, as we did last week in the uranium episode with Rowan Reddy, the critical materials, the supply chains, the risks from China of not getting supply, rare earths. You get that here on the Northern Miner Podcast, we proudly say. So welcome to another episode. It's a really cool interview. Ryan Snyder is the CFO for First Cobalt. Excellent speaker, just easy to listen to, and very insightful. Again, it's not a conference call, of course, but it's really great to get these executives at their perch because they have a very unique, really crucial view, in a sense, in a way that reporters don't have, because they are dealing directly, say, with auto manufacturers, with governments, and reporters aren't in those rooms. So you need someone like Frik Els at the Global Mining Symposium to ask a bunch of questions to get what's going on over there. Because otherwise, it's not something that you can research as a reporter. That's where these interviews become incredibly handy. That's why I like the conference calls as well. Look at what we learned with Barrick, and we called that right. Barrick was not the suitor for Kirkland Lake Gold. It turned out to be Agnico, and who knows the reasons why. Maybe Barrick wanted it. After all, we don't know any of that, but it turned out to be Agnico in a massive deal. And so we're going to tackle that story. We're also going to take a look at this story in Northern Ontario business on the Valley miners at Sudbury's Totem Mine. This was sent to us by a loyal listener, and it sounds like they climbed out for hours on ladders. We're going to look closer at that story in the news section. When I first saw that story, I thought, okay, sounds like they have it under control. Everybody's being precautious and people are taking this seriously, but maybe that I wasn't super troubled by it. It's troubling, but I wasn't super troubled. When you read this story from Northern Ontario business, you do start to think, wow, something could have happened here. So we're going to take a look at that. We're going to take a look at Cobalt, supply chains. Big topic right now are these shortening supply chains, and really, it sounds like the West, North America, Europe, Australia, they seem to want to get independence from China and their supply chains. Just big picture. I think in the last couple of years, China, because of the, some people call it actually totalitarian. Some people say authoritarian, but I'm actually more persuaded by the totalitarian argument. Because of the aggressive moves in China, the anti-capitalist moves, there is a sense, there's more consternation, one might say, in the West. And I think China is being seen as basically a riskier proposition than it was, say, 5 years ago, as far as a reliable business partner. And you see the U.S. is coming out and they're going to be calling into question the trade deal and that they are not fulfilling their part of the deal. Now we have stories, say, on the Evergrande issue, a Chinese developer misses bond payment as stress spreads beyond Evergrande crisis. That's from CNBC. So, what it reminds me of, and I'm hoping we all just rocket ship to the moon this fourth quarter. No one would be happier than I would, and I think there's probably more than a 50% chance of that happening. My concern is this really reminds me of the pre-COVID market, which was very buoyant. Early February, we had a great stock market, and the COVID story was just kind of it just wasn't impacting the stock market, and it wasn't impacting until it did. And I wonder, with this Evergrande issue, if we are approaching a same kind of dynamic. Just a thought. People say the argument that, this is all in Chinese currencies for the most part. So, there's nothing to worry about. And we're also discussing how, relatively speaking, this isn't the same, even though it's, nominally half the amount from Lehman, which is significant. We're in a completely different era, and relatively speaking. And so it's not quite of the same magnitude. Nevertheless, if we start getting contagion, which it kind of looks like with the CNBC headline of this Chinese developer missing a bond payment, I don't think anybody really knows how that turns out. I don't think anybody knows, and I don't know how much we can bet that the Chinese government is going to, how much they're going to bail out, or I don't think we can be certain of anything in that regard. So dramatic as ever, isn't it? We started this September, this quarter, calling this a news cycle in search of a narrative. I think we're having a creeping narrative. The markets remain at an inflection point. Bitcoin's just at 50,000. It wants to break out, but this thing could break lower too. Everything stock market technically is hurting, and it looks like it wants to go down from a technical basis. Tightening in the works. So anyways, on and on it goes. You all know the story. We have a great show lined up. You're not going to want to miss this episode. If you want to find us online, you can find us at northernminer.com. You can find us on Instagram at The Northern Miner. It is back up and running after yesterday's outage. You can also find us on Twitter at Northern Miner. And you can also find us on Facebook, LinkedIn, and YouTube, and wherever podcasts are available, including Spotify, Stitcher, and Apple Podcasts. And with that, let's turn to the news. And turning to the news, let's first take a look at this Northern Ontario business story. Vale miner describes long climb out of Sudbury's Totten mine. And this is by Heidi Ulrichsen with Northern Ontario Business. It says here, at 60 years old, Perry Venedam was one of the oldest miners stranded underground at Vale's Totten mine on Sunday after a piece of equipment being slung to the bottom became lodged in the shaft and put the cage lift system out of operation. Along with 39 other Vale employees, he was forced to use a secondary egress ladder system to ascend out of the mine with the help of mine rescuers who ensured they were able to climb safely with the help of fall arrest equipment. In a situation that has grabbed national media headlines, the Vale employees have gradually emerged from the mine this week, with the last group coming out at 4:45 a.m. Wednesday morning. With more than 30 years of underground experience under his belt, Venedam, a heavy equipment mechanic who's been with Vale for 16 years, helped to keep the other employees calm as they ascended to the surface. A younger man who was climbing along with him said his arms were starting to get sore, so Venedam said they should stop and take a break and that they were in no rush. Quote, "The group that was ahead of us, I said, 'Hey, young guys, I'm coming through,'" said Venedam, who said he actually experienced a similar situation 20 years ago when he was forced to climb ladders out of a mine. In this case, Venedam was at the 3150 level of the mine and needed to climb 2,500 feet to the 650 level, where they were able to catch a cage to the surface. It took him 3.5 hours, starting Monday just before midnight, and emerging from the mine at around 3:30 a.m. Tuesday morning. He said his arms and legs are still a little sore, but other than that, he's feeling just fine. And it also says here that while he was waiting for mine rescue to set up their operations, Venedam watched movies on his iPad, tried to get some sleep, and kept in contact with family members. He also helped the mine rescue team deliver food to his fellow workers. So, if you've ever been in a mine, I've only been in a mine once. It was Western Pacific Resources. I think they're called American Pacific now. And they had a mine by Salt Lake City. And that was the one time I've actually been in a mine. And I can't imagine actually being stuck that deep. I mean, the sense of claustrophobia that you must get must be pretty intense. So it must be kind of scary, We looked at that story and we thought, okay, they have it under control, but credit to the rescue team and credit to those miners that were down there. I'm not sure, like I said last week, I wonder if a couple of them are questioning the decision to be a miner after a situation like that. So glad it all worked out, and great reporting there from Heidi Ulrichsen at Northern Ontario Business. Now, taking a look at this Agnico-Kirkland Lake merger, This is by Cecilia Jamasmy, and it says here that Canadian gold miners Agnico Eagle Mines and Kirkland Lake Gold announced that they are combining their businesses in a stock deal valued at $13.5 billion Canadian. Rumors of an imminent M&A deal involving Kirkland pushed its shares up as much as 8.5% on Monday. And so, and we reported on that. Henry Lazenby reported on that. And it's always tricky reporting a rumor, but this one turned out to be correct. The combined miner will have a market capitalization of approximately $24 billion, which is fairly substantial. Once closed, the merger would also leave Agnico with $2.3 billion of liquidity available, a mineral reserve base of 48 million ounces of gold, and a pipeline of development and exploration projects. And here's where things get interesting. The global gold miner is expected to generate 3.4 million ounces of gold this year. And we remember Barrick is around 4.85 million ounces of gold per year. Newmont is 6 or 7. So Agnico is approaching the top tier, and it continues that this could herald more consolidation in the gold industry, where investors look for deals that unlock value. Agnico Eagle CEO Sean Boyd said during a conference call on Tuesday. Agnico shareholders will own 54% of the combined company, while those of Kirkland Lake will have a 46% ownership. So it just goes to show how far Kirkland Lake has come. I mean, it was only a couple of years ago, if I remember correctly, their stock was trading at about $5, and this closed at $50.63 per share for Kirkland Lake. So they have come a long way, while Agnico has not really done anything in the last 10 years. They're basically where they were. And it continues here, a quote from Sean Boyd, "Both companies don't have to do this. Strategic rationale makes sense and the industrial logic is there." And that's exactly the sense I get. I mean, we remember the conference call with Sean Boyd where he basically said he was more than happy to stay at 2 million ounces of gold per year and grow it, 10%, go to 2.2 million ounce the next year and so on, and grow slow and steady. I think we even had a headline to that effect for the podcast. But it sounds like, Kirkland Lake came on the market and it was probably just a deal that was too good to pass up. I mean, it fits their profile beautifully with, Canada, and maybe Australia isn't typical Agnico Eagle territory, but Canada sure is. And this is also interesting. The new Agnico Eagle will be led by a combined board and management team. Boyd, its current boss, will become executive chairman, while Kirkland Lake CEO Tony McCook will be the combined company's CEO. So these guys have to like each other for this to work. And we're talking about a pretty serious shakeup at both companies. Another quote from Sean Boyd, "The deal is more about the number of mines and location of mines in terms of manageability rather than an overall ounce number." So that is the story. And we have an analysis from Kerry Smith from Haywood Securities, and this is quite interesting. This is by Trish Saywell. Agnico Eagle and Kirkland Lake Gold merger is likely the last major deal in Canada. And according to Kerry Smith from Haywood Securities, quote, "Most of the big deals are done." Talking about Canada. "There are going to be acquisitions of assets by some of the mid-tiers. That's what's going to come next. I think we'll see mid-tier mining companies buying single asset development stage companies. Companies like Rupert Resources, Moneta, and Bella Sun Mining, and others, companies that are in super easy jurisdictions to work with. Having assets in safe and familiar jurisdictions was one of the key drivers and rationales behind the tie-up of Agnico and Kirkland Lake," Smith says. Kirkland Lake's assets are in Canada and Australia, while Agnico's are in Canada, Finland, and Mexico. And we have a quote, "In terms of the assets they are acquiring and the regions they're in, I think it's all pretty complementary, so it's really a smart deal." And on the other suitors that were discussed in the rumors, Smith notes that there were rumors floating around that Kirkland Lake might merge with one of a number of other companies, including Barrick Gold, Newmont, or even Newcrest Mining. Kerry Smith says, quote, "If I'm on the board of Kirkland Lake Gold, I'd much rather link up with Agnico than Barrick. Barrick has operations all over Africa, so there's stuff that they have in their portfolio that Agnico and Kirkland Lake would not be interested in at all. Newmont would be the same because it has a lot of operations in Africa, and Newcrest has assets in countries other than Australia and Canada as well." He continues, "2/3 of the combined company will be in Canada, which Agnico understands very well, and Australia is a stable jurisdiction. Agnico has been over and looked at the Fosterville operation, and it's pretty self-sufficient and runs pretty well. Agnico has a lot of experience in underground mining, and some of that will be useful at Fosterville, but Australia also has good miners. And he also says this is a quantum-sized deal for Agnico. It's doubling the company's size. Again, Kirkland Lake, what a story, how they came out of nowhere. Quote, "The reason Agnico's board is positive is that I don't think the integration will be nearly as difficult as if it were to buy something else with assets in different jurisdictions where they've never worked before." So Kerry Smith really is just hammering home the point of jurisdiction. And this is one of the big themes we have seen in the last 2 years, particularly post-COVID, jurisdiction. But it was already there before, and it's always been important. But really, these last 2 years, it's been highlighted. And you heard Mark Bristow talk about Canada as well. Kerry Smith also says, quote, "We've finally got another really big Canadian mining company. They're going to have 85% of their reserves in Canada, and 75% of their production is going to be in Canada. I like the deal. It's great." So there you have it. Kerry Smith approves of the tie-up between Agnico Eagle and Kirkland Lake, and it sounds like they're going to keep the Agnico name, which I think makes sense. And finally, just a few headlines, because we're short on time here. BHP has inked a nickel supply deal with Toyota Panasonic battery venture. So this is also a topic that we're seeing, which is this idea, and it comes up in the Cobalt interview, which is this idea that corporations are trying to secure their supply, because it's no longer taken for granted that if you need nickel, you can just go out and get some nickel. That is also what could become a theme of the decade. Another headline, lithium-ion battery recycling market to reach $31 billion per year by 2040. That sounds very speculative, doesn't it? BHP opens Australia's first nickel sulfate plant. And then Horizonte Minerals secures more funds for Araguaia nickel project. See all the nickel stories, and we're going to see here coming up in metal prices how nickel is staying elevated. So those are your news stories. Now let's take a look at metal prices. Turning to metal prices, we are at October 5th, and the 10-year bond is trading at 1.524%, and that is down 0.022%. Now, interestingly, earlier in the day is at 1.48%. Now, this may seem arcane to some of you out there that are not concerned with the 10-year bond, but it really is, I'm not an expert in these things, but it is a benchmark of sorts on basically where the bond market is. It's very important, and of where inflation, the economy, as I call it, it's the oracle, it's the tea leaves. So we are down slightly. It was down a little bit more earlier, but it basically perked back up in the last couple of hours. So interestingly, it is above 1.5%, and I tell you, Wall Street likes to keep tabs on that. As we go into metal prices, and we'd like to thank our friends at mining.com/markets for providing us with these prices each and every week. On October 5th, gold is trading at $1,760.31 per ounce. That is $18 higher than last week, but still well below $1,800. Silver is trading at $22.61 per ounce. That is 20 cents higher than last week. Platinum is trading at $966.40 per ounce. That is $13 lower than last week, and palladium continues to trade lower at $1,915.95 per ounce. So that is $35 lower. So really, about a year ago, platinum was as high as $2,800, and now it's at $1,915. So really coming unwound, that trade. Very interestingly. You wonder if it has to do with electric vehicles, and maybe you don't need palladium for electric vehicles like you need it for gas-powered vehicles. That's probably what's going on. And this hidden cost of palladium, if you're a car manufacturer, auto manufacturer, you might start considering to make the move to EVs faster if you see a $2,800 palladium price, and you need that stuff, as far as I understand, for environmental reasons, the catalytic converter. So I hear. So on to our industrial metals. Copper is trading at $4.13 per pound. That is 8 cents lower. Aluminum is trading at $1.30 per pound. That is 2 cents lower. Lead is unchanged at 98 cents per pound. Nickel is trading at $8.22 per pound. That is 48 cents lower than last week. Tin is also lower at $16.15 per pound. That is 87 cents lower. And cobalt is a penny lower at $24.03 per pound. And zinc is also lower at $1.36 per pound, which is 5 cents lower than last week. What do we see? Again, down, but still elevated. I mean, everything. It's basically everything is a little bit down, maybe risk off slightly, but still quite elevated. So, nickel above $8, tin at $16. It's not exactly coming unwound, is it? And those are your metal prices. And coming up, we have Ryan Snyder, Chief Financial Officer for First Cobalt, and he's in conversation with Frik Els at the Global Mining Symposium. Fascinating discussion on the shortening of supply chains, as well as what's going on in the cobalt market and the increasing importance of ESG-friendly metals. As Ryan says, it's more just anecdotal what he's hearing from companies, but this idea of a premium on certain metals that are ESG sourced is becoming more of a prominent theme in the conversation. He was at Inmet Mining for 5 years before in operations finance. He was part of the team that negotiated the friendly merger of Primero with First Majestic in 2018. And he also went to the Kellogg School of Management, where he has an EMBA. So I hope you enjoy it. He is an excellent speaker, and I will see you on the other side.
Ryan Snyder, he's the CFO of First Cobalt. I believe you joined the company in 2017. We could probably just talk the whole half an hour just about what happened between 2017 and 2021 with First Cobalt. I mean, you've been very active. You have lots of irons in the fire. But let's start with what is Cobalt Central, which is the Congo, the DRC. I believe First Cobalt had a look around in the DRC. You kicked some tires there. Can you tell us what happened?
Hi, Frik, and hi, everyone. Thanks for having me on. The DRC, investigation was before my time. If you want to source cobalt globally right now, you almost have to go to the DRC. That's where the majority of the cobalt resides, about 70% of the world's cobalt. First Cobalt, being an up-and-coming cobalt company back in 2017, 2018, was looking for the best sources of cobalt around the world. The DRC would be the predominant one. It is a little difficult for a small outside party to establish itself in the DRC. And so over the course of the last few years, we've kind of changed our strategy to focusing outside the DRC, looking to be the North American hub for cobalt, but understanding that that's where the cobalt is coming from today, aligning ourselves with the more established kind of tier one miners in the DRC, as that is really the ethical feed that's available today from the Congo and from the main source of cobalt in the world.
And just elaborating on the Congo, we have to talk about the 3 Cs, which is Congo, China, and cobalt. China has a stranglehold on the battery metal supply chain. I mean, more specifically cobalt, but other areas as well. They control something like 80% of the midstream market. Chinese companies, China Moly, etc., have been buying up cobalt mines there. How does First Cobalt fit into this whole scenario?
Yeah, it's a great question. And you're bang on. About 80 to 85% of the world's refined cobalt is now controlled in China and produced in China. I think from a First Cobalt point of view, we're trying to give, the global buyers an outlet that's not within China. So if you look at cobalt refining capacity worldwide, as I said, 80 to 85% China. The only other major global producer of refined cobalt is Kokkola in Finland. And, we would be the second one in the world, the second largest outside of China when we come online towards the end of next year. And if you're looking to shorten supply chains, there is an ESG angle. Most of the Chinese refineries are coal powered. There's some concerns with some of the Chinese refineries about blending and the source of material. And we're really trying to differentiate ourselves and go to the automakers and their battery suppliers and say, we know the origin of the cobalt. We're only going to take it from two sources right now. We are established in North America, so we can have shorter supply chains. And we're really in a good spot to feed the US auto market and the battery market as it starts to develop, as well as Europe. Shorter shipping distances to the US and Europe are better for carbon emissions and everything that people are starting to put at the top of their list in terms of key objectives.
And I mean, we've heard a lot about the green energy transition, and I do get the sense that not just cobalt, but lots of metals, including copper, that the center of gravity in mining is shifting westwards. I mean, Europe has a very strong program of investment in battery manufacturing, etc. There seems to be greater awareness in North America about critical minerals, etc. I should read a quote from the US Department of Energy in April this year. Cobalt is considered the highest material supply chain risk for electric vehicles in the short and medium term. Now, not sure what medium term can be can be 5 years or 7 years or 10 years, but I'm interested in the fact that your strategy is that you are starting with a refinery. You also have a project in Idaho, but this is your first entry into the market. Explain a bit about First Cobalt's strategy here.
Sure. Yeah. And I think, we really think this refinery is a unique asset. And so our strategy is to try to get to cash flow and to be a North American top tier premium cobalt supplier as quickly as we can. I think our mining asset in Idaho is very interesting to us, but that is more of a 5 or 6 year kind of project to bring that into production. But in the shorter term, as you mentioned, Frik, you see Europe building out their battery supply chain, their cell plants, their cathode plants. That's going to come to North America. We think the US is about 2 to 3 years behind Europe. And really, we can have a first mover advantage by establishing our refinery here. We're well on our way in terms of permits. We have our construction financing, and we would be the only one in North America kind of able to serve the US as it builds out and Europe as it builds out. And so really, we looked at the worldwide landscape and saw ourselves in a really good position to be a first mover in terms of a producing entity in the short term. Idaho, we're still very interested in it. We view cobalt as something that's going to be the dominant battery chemistry will contain cobalt for the next 10 years. And in Idaho, we're very confident we'll get bigger. And as we move to 4, 5, 6 years from now, could be an asset we could bring online and come up with an actual local source of cobalt for the North American market.
And that is the Idaho project it's a primary cobalt project. And I mean, there's only one in the whole wide world in Morocco at the moment. So do you want to be number 2?
I think we want to be one of the first, right? There's another cobalt company developing a mine in Idaho as well. I think, we trust our geologists. The U.S. Geological Survey as well said the Idaho Cobalt Belt is the most abundant cobalt area or the most prospective cobalt area in North America. As we said, most of the world's cobalt is coming from the DRC as a byproduct of the copper mines or as a byproduct of nickel and some of the other operations like Vale and Glencore operations around the world. But there is no primary cobalt source in the world other than the one Moroccan entity you mentioned, Frik. And so we really think the world's going to need a lot more cobalt moving forward. We really think prices will remain at today's level and move a bit higher. So there won't be quite the same yo-yoing and volatility that has occurred over the last 3 to 5 years. And as those prices stabilize and continue to move up, we think Idaho becomes an area that can be economic for primary cobalt mining to serve the worldwide market.
Speaking of prices, I had a look this morning. Cobalt sulfate is around $12,000 on a 20% basis. That's up 40%. This year. Cobalt metal is firmly above 50K, which is up almost 60%. Same with hydroxide, up over 60%. But we've seen this before. Cobalt can be a heartbreaker. You are firm in your belief that that this is sort of a base to work from, current prices?
Yeah, I think that's our view. And you're absolutely right. I mean, it has been very volatile in the past. Cobalt was as high as $43 a pound in 2018 before dropping down to $12 or $13 a pound. I think, the long-term view of what's driving cobalt prices is now coming more into a short-term focus. The push for electric vehicles, whether it's the US in terms of their investments in electrification, whether it's the world realizing from a climate change perspective that we need to act now. I think you'll see in Europe, and it's been talked about, significant taxes for gas powered cars in the future, and really a more concerted push towards electric vehicles for real this time. I think most people would look at the world. If you look at all the automakers in the world, they've all directed their R&D to electric vehicles. There's nobody that's putting billions of dollars into the next gas powered car. And that's a good kind of leading indicator that if all the auto companies are moving to electric vehicles, the stability of demand for cobalt should be there for the foreseeable future and should hold those prices up.
Yeah, and I mean, there's been a lot of talk about changing chemistries. We've heard about the iron sulfate battery that's very popular, no cobalt in there. Tesla, Elon Musk says he tells everyone no more cobalt in his vehicles, and then the next week he signs an offtake somewhere in the DRC. What is happening in terms of thrifting of cobalt? I mean, it is an expensive metal. You don't want too much cobalt in there.
Yeah, and it's a question we get often. I think we follow a lot of cobalt research and deal with a lot of experts in the space. I think the global view is 80 to 85% of the battery chemistries over the next 10 years will contain cobalt. The two main battery chemistries being NCM, so nickel, cobalt, manganese, and NCA, nickel, cobalt, aluminum, which is what goes into a Tesla. There are other chemistries, as you know, Frik, the LFP, which does not contain cobalt. That is mainly used in very short range cars. So popular in China, not really made for the North American market. Tesla does not really sell cars with that battery in North America right now. And most of the other auto companies are using nickel, cobalt, manganese battery chemistries. I think what we will see is some cobalt thrifting. I think that's true. We do expect the percentage of cobalt in a battery to go down over time, but the sheer increase in demand for electric vehicles and total batteries really has cobalt demand looking at about an 18 to 20% kind of annual growth rate over the next 10 years. I think the Tesla point is an interesting one, and Elon Musk has a big following. He's a very vocal guy. He's often talked about engineering cobalt out. We view that as more of an aspirational thing. He said that 3 or 4 years ago as well. It's interesting to point out. You pointed out the offtake, but even on Tesla's website, on Tesla's impact statements, Elon Musk is quoted as saying, "Yeah, we expect it to come down, but make no mistake, we're going to need more cobalt than we need today for our Teslas going forward, because the sheer demand for cars and batteries will far outpace the ability to thrift." So I do think we will see some thrifting. We expect that. You can't take cobalt all the way out today for long range vehicles. It's what gives cars thermal stability, make sure they don't catch on fire, and you don't want to be the automaker or the battery maker whose cars catch on fire. And so the safety aspect is critical to the world today, and we think cobalt will remain in batteries for the foreseeable future.
When it comes to electric cars, people are only just beginning to talk about fires. I mean, there was a huge recall from the Korean manufacturers. Every now and then you see a video of a Tesla, up in flames, and cobalt is essential to that. Apart from that, it's also, especially the European manufacturers, they have put all their R&D and development into NCM. Yes, the new chemistries are going to come along, but you don't, just throw away 5 years of development on a certain chemistry path. So yeah, I have to agree with you that, cobalt is going to be around no matter what Elon Musk wants to tell his investors. What I find interesting about your strategy is you also have recycling in there. Your plant is capable to handle recycling. And I only learned this recently, but you're talking about a black mass when it comes to battery recycling. Tell us a bit about First Cobalt and recycling.
Sure. Yeah. And so, for our refinery, the base load input is going to be cobalt hydroxide, which is the cobalt coming from the DRC. We have aligned with the two major producers there, but black mass is really interesting. So black mass is really the ground down material you would get from recycled lithium ion batteries, whether that's from electric vehicles in the future as they start to reach their end of life, or from consumer electronics today. It's going to contain cobalt, nickel, a bit of copper, a bit of lithium, kind of all the battery metals are ground up into this black mass. And we've been, looking at ways to grow beyond our baseline refinery. We do feel that recycled batteries is the way to go. We feel if you're looking to be the greenest and most sustainable provider of cobalt, There's nothing greener than continuing to reuse the battery materials and reduce the amount of future mining you need, especially in some difficult areas. We have been quietly working with black mass providers, testing some material, running leach tests with our lab partners. And we do have a leading engineering firm named Confidential running through studies on the economics of putting black mass through our facility. We do believe our hydromet process will be able to take that in. And so what we'd really be looking at is adding some black mass to increase our output on the early days, and then eventually adding a circuit to produce a nickel sulfate and other battery materials so that we can be more than just a cobalt provider, but really a battery materials feedstock provider to the next leg of the supply chain.
Do you envisage or see a kind of a two-tier market developing, that there is a cobalt supply chain that supplies North America and Europe, and then there is something else, there is the China supply chain, and maybe prices would be different in different markets?
I think that's our view, and especially with our commercial team as well. It's very tough to quantify what that price difference would be. And in our underlying numbers that would be in our presentation or website, we don't try to put a premium above the Chinese price on our cobalt, but we think that's realistic. We've heard anecdotally in conversations with potential buyers that they are willing to pay more for non-Chinese cobalt if they know the origin, if they know it's not blended, if they know it has good ESG credentials, if they know it's a sure contract and a shorter supply chain. There is a market out there for that product being a premium product. I think we will see that, but the extent to which the premium will be is tough to know. But conversationally, I think that's where the world is going. Premium, conflict-free, green cobalt will be a premium product.
You also have a phase in your future plans where you manufacture precursors. So how important is the vertical integration that you have here?
Yeah, I think that is a goal. Right now it's to get the cobalt sulfate plant up and running and then move into battery recycling and start to produce some of those other materials. We have a very large land package in Ontario. It would make sense to look to go to the next step in the supply chain, which is precursor. From an economics point of view, you can skip the final step in the cobalt sulfate production. You don't need to crystallize it if you don't have to ship it around the world, if you're able to just send it to a precursor plant next door. So you will save a decent chunk of OPEX. So there is kind of economic sense to doing that. And we've had some good conversations, with various levels of government that this would make sense for Canada and its auto supply chain and for North America as a whole. So I don't want to say that strategy is further developed than it truly is, but it is something we're looking at. We think it makes a lot of sense, and we think once the cobalt sulfate plant is up and running, we have that critical mass in terms of land and infrastructure and production capabilities that it would make sense to start to build out some of the other parts of the supply chain kind of right next door on our property.
I also get the sense, after years of talk of government support, or that equation is finally changing. The West looked on while China was getting a chokehold on not just cobalt, on rare earths. We know that story well. Do you think there's more of a fundamental change in how governments view mining, view critical minerals? Are we going to go beyond making lists of critical minerals and then filing it away?
I hope so. I think in our case, the governments in Canada have been very good to us. I think they understand, cobalt, specifically cobalt, nickel. You've had other presentations on nickel. They're critical minerals and they're important to the auto supply chain. So that is very important to Ontario and Canada as a whole. We have a $5 million grant from the government of Ontario, a $5 million zero interest loan from the government of Canada. So they have shown support on that side of things. You're right. There's often just a list and this is a critical mineral and we should do something about it. We are talking to the US about ways to do that. I know other companies are as well. They are looking at securing kind of cobalt supply and making sure it doesn't all go to China. They have funded us for studies on metallurgy for our Iron Creek asset in Idaho to try to look at ways to upgrade the cobalt and have it not leave the United States. So hopefully we're at the tip of the iceberg to move beyond just lists and talk and into true investments and ways to ease kind of new projects in North America. And I think that's going to come. I think the governments see where they need to step in.
And it's not as if Canada doesn't have a history with cobalt. If I remember correctly, the Northern Miner started in a town called Cobalt. So there is a rich history here, and we, kind of let it slip away.
I think that's right. Our refinery is located in the town of Cobalt in Ontario, so aptly named. That was an old historic kind of silver cobalt mining area, but people obviously cared more about the silver 100 years ago than the cobalt. But it does speak to a rich history in Canada, and hopefully, this will move beyond one of the niche battery metals to being an important kind of core metal for everybody moving forward over the next few years.
In Idaho, it's also a past producing area. I mean, I don't know exactly how it works, but the U.S. Defense Minerals Act is in place there, or can you tell us a little bit more about that?
Yeah, I mean, our property, there is some history. It was actually mined for iron and copper, or looked at for iron and copper by Noranda and other owners kind of 30 or 40 years ago. There is an old existing mine in Idaho, the Blackbird mine, now owned by Glencore, which produced a variety of metals, including cobalt, in the past. And Idaho is a very pro-mining jurisdiction. So I think, the U.S. looks at all the states, right? Looks at where these critical minerals can come from, looks at Idaho as the most prospective place. And whether it's Department of Defense or Department of Energy is starting to look at, is there ways we can incentivize, companies to actually extract these minerals from the ground, so that we don't need to rely on other areas of the world as much, which has become a pretty dominant theme, right, over the last few years, whether it's COVID or relations with China in general.
Thanks, Ryan. Excellent.
Thanks, everyone. Take care.
Another fascinating discussion on the critical metals and taking place at the Global Mining Symposium. That is a quarterly event and it is free to attend. Highly recommend checking it out. Just go to events.northernminer.com and you can check out the next one. Thanks once again for listening to the podcast. If you want to help out the podcast, just leave us a review in the Apple Podcast directory or share it with your friends. Until next week, take care.